The Finance Committee of Tuesday, September 28, 2021 to order at 6:01 p.m. Our first order of business is the approval of minutes, draft minutes of the September 14th, 2021 Finance meeting. Do I have a motion to approve?
So moved.
Is there discussion? Hearing none, I'll put it to a vote. Those in favor, please signify by saying aye.
Aye.
The ayes have it. Motion carries. The next item, public appearances for non-agenda items. I don't see anybody in chambers. Do we have anybody online? We do not. Moving on to item 4, the Finance Director report. We have our Finance Director, Misty Dodge. The floor is yours.
Thank you. So big thing to report today is the 2022 Mayor's proposed budget is available. It's out on the city's website. I did email all of you the link to the document as well as the council amendment form so that you have that. Next steps in this process is next week, the 5th and the 6th, is the Finance Committee meeting, technically, though we invite all of the council members to join us. This is the one where all of the department heads come in, we share what the significant changes were, any new proposals, and then answer whatever questions that you have. So it's part of that information gathering stage for you. And then the next stage after that is there's a public hearing at our next council meeting on October 12th. So that's where the public can come in and share their thoughts about what the mayor's proposed budget is. And then after that, we go through the council amendment process. So good to have kind of that next stage ready to start. It is a very large document, so if you have any questions on how to navigate it or what some of that stuff means, I'm obviously available to answer any questions about that. And I'll leave the policy part of it about what's included and why to the mayor. That is it.
Okay, very good. On to the next item, review of bills. 5A, detailed review of checks for $10,000 and above for the period of September 1st through the 15th, 2021, totaling $1,032,782.28. Do we have, I can say a motion to approve, but do we have discussion? Okay. I had one item. The first item, the advanced engineering and environmental, the stormwater study. Is that a particular stormwater or a particular project? Can you be more specific, Misty?
Yeah, it is, but I cannot tell from this which project it is. So I will look that up and get back to you guys.
Okay, very good. All right, moving on to 5B, detailed review of all checks issued, checks 122,527 through 122,566 for the period of September 1st through the 15th, 2021, totaling $1,077,251.27. Is there discussion from the committee? Questions? Okay, hearing none. We will move on to item 6A under action items. Motion to approve Resolution R-148-21, a resolution to approve a contract for services for North Fish Hatchery Road, Hub Phase 1, north side of Traceway Drive, final design.
I move approval.
Approval made by Alder Gerhardt. Misty, are you going to address this?
We actually have Scott Endel, the Parks Director, and Wade Thompson, the Community Planner, here to share that detail.
Okay, very good. I'll turn it over to you, gentlemen.
Scott, would you like me to kick it off? Thanks, Finance Committee. Wade Thompson with Planning Department. I think folks are very familiar with the Hub project. We came up with a Hub concept back in November of last year, ran that through various committee bodies, the council, and then funding was allocated to take that concept to what we call final design, which essentially means ready for construction. So that's where we're at today. We did put out an RFP back in January, got 5 bids, interviewed 3 firms. Ultimately, our 5-person interview panel selected Engberg Anderson as a primary consultant, and Engberg actually did our concept plan as well. And they had a competitive bid. And also we're familiar with our big picture H&I. So we think really the best fit for this project. Again, you know, this is phase one, a majority of phase one, which is the north side of Traceway Drive, essentially park space. There is a phase two for the hub, which is not on the table tonight. So with that, Scott, feel free to add anything I missed, or we can certainly take any questions or comments that the committee might have.
Maybe just one general comment, Wade, if I might. This is this space was actually the result of the development, the high rises development there. The city did receive parkland in lieu of that development. So this is the parkland that we are planning to develop into this park space. So just a little bit of a context at the front end there.
And then I would like to add as well, so there is a budget amendment associated with this. It does need a 2/3 vote. Basically what we're doing is, it's all park fee money from different developments. We're using the park fee funds that have more restrictions on them from a time perspective first. So we're going to apply those fees from the High Line and the Terrace Point project that Scott was talking about to this project. So the total overall budget for the project staying the same. I'm just changing which specific pot of money within the pot of money that we're using to pay for it.
So then with the amendment, the 2/3 is for council.
Correct.
Okay. Questions from the committee? Go ahead. Alder Gerhart, go ahead.
Thanks. Just a quick comment. I am just really excited to see this moving into the design phase. So great work from both of you, and really thrilled to see where this goes next.
Maybe just a clarifying statement, if I might. If you recall, looking at the conceptual plan, it does include a building, a playground, a bike feature, along with a covered hard court area. This work does not include that hard court covered area at this point in time. So just a clarification note on that.
And with that clarification, is it not included because of dollars? Is that the reason for it? Okay.
That is correct.
Okay,
That is correct.
Very good. Any additional discussion? Hearing none, we'll put it to a vote. Those in favor of Resolution R-148-21 signify by saying aye.
Aye.
Those opposed, hearing none, the resolution passes.
Thanks, everyone.
Thank you. Next action item, 6B, Resolution R-170-21, requesting exemption from county library tax. Do I have a motion?
So moved.
Alder Wheeler moves. Misty, would you like to speak to this one?
Yes, please.
All
So
right.
this is something we do every year. We have our own library here at the city of Fitchburg that property taxes goes to fund. Because we have that level of service here, we can exempt ourselves from the county-wide library property tax charge. So this is really, it's more or less a housekeeping thing, certifying that we continue to be eligible to be exempted from that extra tax because we have our own.
Very good. Questions from the committee? Okay. Seeing none. Those in favor of Resolution R-170-21 signify by saying aye.
Aye.
The motion carries. Moving on to action item 6C. Do I have a motion for Resolution R-171-21, police squad car lease buyouts?
I move approval.
All right. Alder Gerhart, motions, approval. Misty, would you care to address this one as well?
Yes, so this is kind of the next phase of the transition from leasing our squad cars to purchasing our squad cars. So these are 6 squads that we have leases that are expiring, and we have an option to basically buy off those squads off of the lease for $6,000 to $8,000 each, which is included in there. The intention is then that we will keep them for an extra 2 years, basically to buy ourselves some time while we build up the funds in order to purchase the next round of squads. So we think that even $8,000 over the 2 years is a pretty good price to get a little more life out of them.
Okay, I would agree. Let's open up for discussion to the committee. Are there any questions from the committee?
You know how much mileage is on these vehicles?
I do not, but I can find out.
Any additional questions?
No, okay. And why 2 years and not longer?
So right now, it was a 3-year lease, so we'd go from 3 years to 5 years. Squad cars, my understanding is they need to be very high-performing vehicles, and we don't want to use them as an active squad past kind of what that high performance is. So what's included in the CIP that's been adopted is once it hits that 5-year mark, then it would be transitioned to another department to be used as a fleet car, which just has much less demanding service needs.
Thanks.
Very good. Any additional questions? Hearing none. Let's put the resolution to a vote. Resolution R-171-21. Those in favor, please signify by saying aye.
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 Motion carries. Moving on to the next action item, 6D, Resolution R-172-21, Police Squad Car Replacement Purchase. Misty, would you care to address this particular action item first?
Yes, please. So staff is recommending that you postpone this item to your next meeting. The vehicle that we are replacing through this pre-approval was actually in a pretty significant crash. So we are working with the insurance company to figure out what that means. And we just want to have a better picture financially about what that all means before we bring forward this replacement further. So it would be our recommendation to postpone it just to your next meeting.
Do I have a motion?
I move for postponement.
All right.
And to be clear, so that's to the October 12th meeting.
I move for postponement to the October 12th meeting.
Excellent, thank you.
Okay. Do I still open up to discussion? Is there additional discussion? Hearing none. Let's place it to a vote. Let's postpone Resolution R-172-21 to the October 12th meeting. Those in favor signify by saying aye.
Aye.
Aye. Motion carries. Moving on to the next item, which is item 6E, Resolution R-176-21, Purchase of Police Department Fleet Vehicles. Do I have a motion to approve?
I move approval.
Motion to approve by Alder Gerhart. Misty, would you care to address this one as well?
Yes. So this is another vehicle within the police department. Difference is this isn't a squad, this is a fleet vehicle. It is an additional fleet vehicle, so it's an additional car that will be added to the fleet, but it is purchased off of state contract. And it is in compliance with what the adopted CIP included.
Okay, thank you. Is there additional questions, discussion, I should say, from the committee? Alder Gerhart.
Can you
Go
just
ahead.
clarify the difference between a fleet vehicle and a squad car in the police department?
I could try.
It's not going to be.
Oh, yay!
Chad, I was going to say, yeah, Chad might.
The knight in shining armor has arrived.
Good evening, Alders. So the difference between a patrol vehicle and a fleet vehicle is the patrol vehicles are typically going to be your Ford Police Interceptors or something that is built for more special service-related, heavier duty tasks like patrol work. The fleet vehicles, typically what the police department does is purchase vehicles that are straight off of state contract. They're basically passenger vehicles that any person could go in and buy for private use as well. But because they're not subjected to the demands of 24/7 use and not subjected to patrol type driving and going over obstacles and curbs and those sorts of things, we've just typically bought a regular vehicle, so to speak. So that's why we just refer to them as a fleet vehicle.
Very good, thank you. Additional questions from the committee? Hearing none, let's place the motion to a vote. Those in favor of Resolution R-176-21 signify by saying aye.
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 The motion carries. And moving on to the next item, 6F. Motion to approve Resolution R-183-21, initial resolution authorizing $8,345,000 general obligation bonds for street improvement projects, direct referral. Do I have a motion to approve?
So moved.
Motion by Alder Wheeler. Misty, I will turn this one back over to you.
Thank you. So the next four resolutions are all connected. This is basically our kickoff to the 2021 debt issuance process. And we have Greg Johnson from Ellers, which is our financial advisor, here to share some information about what we're doing and some of the numbers involved. So if we could, I'd like to turn it over to him.
Very good. Go ahead, Greg.
Thank you. Good evening, everyone. Good to be with you this evening. I'll share my screen and bring up the pre-sale report that was included as part of your packet that summarizes the bond issue, and I'll walk through the details of what's being funded. This, as Misty mentioned, this is part of the city's annual capital improvement borrowing. So we're at the beginning of the debt issuance process. I'll summarize that process here at the end of the presentation. But in terms of just summarizing the intent of this bond issue, it is really twofold. First, it finances street projects identified within the city's capital improvement plan, not related to TID districts. The debt service for those street projects will be repaid by the city's debt service levy. And second purpose is the TID number 9 street improvement projects, and the debt service for those projects will be repaid by TID 9 revenues. So really, those are the two general purposes of this bond issue. It's one set of bonds that are being sold, but two general types of projects that are being financed. I'm going to walk through the financial exhibits that were included in the packet, and so you can kind of see the detail behind the financing plan. So first, we like to start with kind of summarizing the city's existing general obligation debt, kind of look at the existing levy impact before we look at the impact of this proposed borrowing. And we've also modeled out future borrowings to look at the long-term levy impact for financing capital projects. So in Table 1 on the far left-hand side, we have the total general obligation debt service payments that the city presently has outstanding each year for its existing debt. There are other expenses typically budgeted within the debt service fund. We've accounted for those in this table as well. And then the city uses several non-levy revenue sources annually and budgets for them to help pay the general obligation debt service payments. That largely consists of revenues from several TIF districts, TID 4, TID 6, and TID 10. There is plans to call some debt for TID 4 in 2002 and also call and prepay early some debt for TID 6 in 2023. So we've accounted for that here in this chart for those two TID districts. Then there are some other non-levy revenue sources as well, some lease revenue, some special assessment revenue, some general interest earnings, and then the fire impact fee money is applied as well. And so in the column labeled net tax levy, that kind of shows where the existing levy is for existing debt before we look at the impact of new projects. So your levy in the 2021 budget was approximately $4.3 million. If no additional debt was issued in 2022, that levy would be about $3.8 million. So there's a decrease in the levy, which allows us to kind of incorporate these new projects, which we'll talk about here next. So in Table 2 is kind of the multi-year list of capital projects. This is very similar to what we presented as far as the part of the city's financial management plan update that was presented to the Common Council back in June. There were some adjustments to the 2021 projects, and that is all that is being considered this evening. The projects for 2022 through 2031 are what was identified in the financial management plan when that was developed back in June. There's been some adjustments as you've worked through the budget process, but we've left those future debt issuances for planning purposes because we'd like to look beyond just the current debt issue that's before you this evening. So we typically break down each bond issue by repayment source. So down below, we show how much of the bond issue is being repaid by the levy, how much is being repaid by TID 9 assessments or stormwater revenue. So we kind of do a multi-year plan so we can look several years out to plan for not only current capital projects, but look at the impact of future projects as well. So for this particular debt issuance, as I mentioned, it really kind of falls into two categories, the projects, TID 9 capital improvement projects, and then street improvement projects, not attributable to TID districts, but will be repaid through the city's debt service levy. So the total project cost is about $15.4 million. When we factor in the issuance expenses, the total borrowing comes in at $15.7 million. You'll notice there are several resolutions on your agenda this evening. As Misty mentioned, they are all interrelated. State statutes, when you issue corporate purpose bonds, require that you adopt separate resolutions that specify what the particular bonds will fund. So you'll see there's a resolution stating there's part of the bond issue for street projects and another resolution that identifies the portion that's going towards community development projects or TID projects. And then there's a final resolution that kind of identifies the total amount that you're borrowing. So you're not doing three separate bond issues, you're just doing one bond issue that has two purpose, and then there's a resolution for the total borrowing amount of $15.7 million. And that's to comply with state statutes for issuing corporate purpose bonds. So in terms of how that debt service is allocated, in Table 4, we show how much of the debt will be attributable to TID District 9. This is amortized over the full remaining maximum life of TID District 9, and the final year of increment collection is 2036. And then the levy projects, the street improvement projects outside the TID district, those are amortized over 20 years. For general obligation debt under state statutes, that's the maximum term allowed for general obligation corporate purpose bonds. So when we look at the impact of your existing debt and just the proposed debt issuance that we're talking about this evening, that is summarized in Table 5. So on the far left-hand side is the existing debt service levy that I summarized earlier. So just forecast what the levy is for existing debt that's outstanding once TIF and those other non-levy revenue sources are accounted for. We do our equalized value projections, and we've also projected closures for TIF districts in the future. So that's represented in these numbers as well. And then under the proposed debt column, we show the proposed debt service that you're considering this evening. So the gross principal and interest payments for the $15.7 million. And then we show as an offset or an abatement, the portion of the debt that will be covered by TID 9 revenues. So when we look at, your total levy for debt service, it's going to be approximately, $4,518,000 for 2022, which is about a $223,500 increase. That's comparable to kind of the draft budget that is presently prepared, and we can certainly make adjustments to that if that debt service levy, fluctuates between now and the anticipated budget adoption. So really, when we look going forward, your levy for debt service would drop again in 2023. So we're really leaving room for future capital borrowings that aren't being acted on this evening, but as part of the city's long-range capital improvement planning efforts. So to that end, in Table 6, we kind of have a multi-year projection that kind of looks at debt issuance all the way out through 2031. So we update this annually as part of the financial management plan update. So as adjustments are made to the capital improvement plan, we update this particular model. So we like to look long-term and not just look at what you're issuing debt for here in the near term, but future debt issuance as well. And so when we kind of scroll over to the far right-hand side to kind of really look at the kind of the big picture impact of future debt issuance, you can see that, when we have your debt service levy, this is for your existing debt, the proposed 2021 bonds, and then illustrative financings all the way out through 2031. You'll see that the debt service levy is projected to increase by about $145,000 per year. That's right in line with the target that we presented during the financial management plan update back in June. And so we, in this planning model, the last debt issuance occurs in 2031. If you did another debt issuance in 2032, that would hit the levy in 2033. So you'll see in 2033, we've built in a large reduction in the debt service levy. That's to account for future debt issuance that's, not yet incorporated into this model. So really in the big picture, in terms of, this proposed issuance and the fiscal impact, it's very comparable to what was presented in the multi-year plan back in June. In terms of the city's general obligation debt limit, under state statutes, the amount of principal outstanding cannot exceed 5% of the city's total equalized value. So at the end of fiscal year 2021, the city's general obligation debt limit is about 205 million. Of your existing debt outstanding, you'd have about 52.3 million outstanding. So you'd be at about 26% of your limit. When we factor in the 15.7 million of debt issuance for this year, you would be at about 33% of your debt limit by the end of fiscal year 2021. You would still have remaining borrowing capacity of 137 million. So certainly preserving more than adequate borrowing capacity for future debt issuance. We modeled all those future debt issuances out through 2031. It really shows that you're really not going much beyond, where you ended fiscal year 2020 at about 34% of your limit. Even with all these other future capital borrowings, you're staying, in that mid 30%. So a very, very good, comfortable range in terms of utilization of your debt limit. So certainly not going in excess in terms of preserving future borrowing capacity. The final item that we've kind of incorporated into our financial analysis is a more detailed look at TID District number 9, since that's projected to incorporate a portion of the debt service for this borrowing. We always like to take a look at the cash flow projection to make sure, with reasonable assumptions that the TID district can support the debt service that you're considering authorizing for that district. So the chart here up on the screen is the development assumptions. So this in the actual column, this shows the actual growth in tax incremental value each year that's been certified by the Department of Revenue. So this district saw an additional 57.2 million of value this past year. It's projected, based on construction occurring within the district this year, that could result in another 17.4 million of increment value. So if we take all of that existing value and that additional projected increment value being constructed this year, this district has a 20-year maximum life. So over the life of the district, with some modest appreciation of 0.5%, the district would generate about 47.1 million in tax increment revenue. And this is the revenue stream that the district has available to help pay for debt service and other expenses of the district. So to see what that looks like in terms of the cash flow projection, we start with all of the revenues for TID District 9. So it's primarily the tax increment revenue, which is typical for most TIF districts. There's some intergovernmental revenue received from the state. There's some personal property aid payments. So that's the total revenue stream to the district. There have been some pay-as-you-go development agreements executed for development incentives within TID District 9. So one is for sub-zero. So we show the current amortization schedule and repayment of that development incentive. And then there's other development incentives that are anticipated but are still subject to a final repayment schedule. A 5.5 million incentive also for sub-zero, and then an estimated 13.8 million incentive for Promega. So how those incentives work is that they are paid out from the increment that is generated by their particular project. So that is how each payment is made to the developer. They only get their proportional share of the tax revenue generated by their development. If their development doesn't generate enough revenue to satisfy the full amount of the incentive, the city is under no obligation to make up that difference. So the other expenses that we've accounted for in the cash flow, anticipated development incentive to Supreme Structures, and then we have, the proposed debt issuance for 2021, and then we show other future capital borrowings for future capital investment within TID District number 9 in 2022 and 2025. And then just the other miscellaneous expenses within the district, mainly the capital outlay as funds are borrowed and expended. They're recorded in the expenditures of the district. And then just some ongoing administrative costs for the city's annual cost of just administering the district and evaluating development projects. So all of that kind of rolls up to the balances where we look at, the annual column is just the difference between revenues and expenses each year. And then the cumulative shows how that balance builds over time. With the proposed 2021 bonds and future debt issuance, and just taking into account increment value that's been certified thus far, and just what's being constructed in 2021, there's no other further new development projected within the district. The district is projected to generate enough revenue to satisfy its existing obligations and future obligations that could occur by the final year of increment collection in 2036. So it gives us some, a comfort level that the TID district is generating enough revenue to cover their share of the debt service for the bond issue that's before you this evening. So to kind of summarize the process in terms of kind of where we're at, in terms of the ultimate schedule here. Oops, I'll go back and kind of summarize kind of the schedule. There it is. We're at the beginning of the process here this evening. So it's here before you at the Finance Committee level, and it'll be considered, if that's your pleasure, by the Common Council this evening. So this is kind of the first step of the process to kind of authorize the issuance of debt. There will be a conference call with Moody's Investor Services, which will occur sometime the week of October 18th. Then we have a due diligence call to kind of review the offering documents before those are made public to the investors. And then the sale of the bonds will occur on November 9th, the date of a regularly scheduled Common Council meeting. We'll take bids, and typically the bond sale is recommended to be awarded to the underwriter that submits the lowest interest rates. And then the closing date, receipt of funds by the city, is anticipated to occur on December 1st. So that's an overview. I know there's a lot of information here to digest. I'll pause here and see if Misty has any further comments. I'm also happy to answer any questions you may have.
The only, I guess, comment I'd like to make is the timing of this is a little different. So we are selling the bonds and authorizing the sale on November 9th, which is the same night that the 2022 budget is going to be adopted. So you will likely see an omnibus amendment from me, just like last year, with a bunch of to be determined that we will fill out once we have the final sales on there. Ellers is really great. They are generally somewhat conservative, like in the ballpark, but conservative as far as what rates we think we will get. So hopefully that will mean that the tax levy can go down a little bit for it, but we won't really know until that sale happens.
Okay, very good. Is there, open it up for questions from the committee. Is there discussion? Hearing none, let's place it to a vote. If I find my place here. Those in favor of Resolution R-183-21 signify by saying aye. Aye. The ayes have it. Motion carries. Next item. 6G. Resolution R-184-21, initial resolution authorizing $7,355,000 general obligation bonds for community development project in tax incremental districts. That's a direct referral. Yes, I'm still on the same one. I'm sorry, I'm jumping around here. Do I hear a motion to approve?
So moved.
Okay, Alder Wheeler, motions to approve. May I turn this back over to you, Misty, for questions, or back to Ellers?
So this is just the next one kind of in the series. All
Right.
4 of these resolutions really relate to the information Greg provided.
Very good. That's what I thought. Discussion from the committee? Hearing none. Let's place it to a vote. Those in favor of Resolution R-184-21, initial resolution authorizing $7,355,000 general obligation bonds for community development projects in the tax incremental districts, direct referral, signify by saying aye.
Aye.
Motion carries. Next item, Resolution R-185-21, directing publication of notice to electors relating to bond issues, direct referral. Do I hear a motion?
I move approval.
Alder Gerhart, motions for approval. Misty, just continuation?
Just continue unless there's questions.
All right, is there any questions from the committee? Hearing none. Those in favor of Resolution R-185-21 signify by saying aye.
Aye.
Aye. Motion carries. Next item, 6I, Resolution R-186-21, providing for the sale of not to exceed $15,700,000 general obligation corporate purpose bonds, Series 2021A, direct referral. Do I hear a motion to approve?
So moved.
Motion is made by Alder Wheeler. Misty, same as the previous?
Correct, nothing new.
All right, any questions from the committee? Discussion? Hearing none. Those in favor of Resolution R-186-21 signify by saying aye.
Aye.
Aye. And the motion carries. That concludes our action items. On to the next announcements. Next meeting, October 5th and October 6th, 2021, budget meetings. And then October 12th, 2021, our regular meeting. Misty, any further comment? I know you mentioned these meetings earlier, but anything to add?
Nope, just that I'm looking forward to continuing the budget process.
Very good. Now on to adjournment. Do I hear a motion to adjourn?
I move to adjourn.
Alder Gerhart, motions to adjourn. Those in favor signify by saying aye.
Aye.
We are adjourned, the Finance Committee, at 6:37 PM. Thank you very much, everyone.